Hello everyone. Welcome to the Stock Minds web channel. In an era defined by rapid transformation in artificial intelligence, cloud computing, and enterprise networking, investors are searching for rare combinations of robust growth and reasonable valuation. Arista Networks, NYSE ANET, has delivered just that. The company's Q1 2025 earnings report not only shattered revenue and profitability records, but also demonstrated remarkable free cash flow strength. In this video, we will dive into Arista Networks' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Arista Networks. Founded in 2004 by Andy Bechtolsheim, Kenneth Duda, and David Cheriton, originally as Arista, renamed to Arista Networks in 2008. Arista has carved out a reputation as a leader in high-performance, software-driven networking solutions. Based in Santa Clara, California, the company specializes in cloud-scale, low-latency Ethernet switching hardware and its flagship Extensible Operating System (EOS). Arista's primary customers include hyperscale data centers, AI infrastructure providers, and enterprise campus networks. Arista Networks' financial performance. Arista Networks delivered a strong financial performance in Q1 2025, demonstrating its ability to grow consistently while maintaining high profitability. The company reported quarterly revenue of $2 billion, up 27.58% from $1.57 billion in Q1 2024, reflecting robust demand across cloud and enterprise segments. Earnings per share, EPS, for the quarter rose 28% year-over-year to 64 cents, compared to 50 cents in the same period last year. On a trailing 12-month TTM basis, revenue reached $7.43 billion, a 22.3% increase from $6.08 billion a year earlier, while EPS improved by 31.3% to $2.37, up from $1.80. Even more notably, free cash flow per share surged 76.18% year-over-year to $2.96, indicating exceptional cash generation. Arista also posted strong profitability metrics, with a gross profit margin of 64.09%, net profit margin of 40.72%, and a remarkable free cash flow margin of 50.9%. Arista Networks has impressive capital efficiency ratios, such as a return on assets of 15.68% and a return on equity of 33.68%, while operating with a debt-free balance sheet, making its performance even more impressive. Over the past 5 years, Arista Networks' revenue has been growing at a 31.6% CAGR, net income at 44.5%, and free cash flow at 47.8%. Arista has grown its business rapidly and continues to grow rapidly. Arista Networks' fiscal 2025 financial forecast. Looking ahead, analysts are optimistic, projecting 2025 revenue of $8.39 billion, a 19.76% increase from 2024's $7 billion, and non-GAAP EPS of $2.56, up 12.68% from $2.27. The stock carries a consensus buy rating with an average price target of $105.05, representing 21.8% upside, and a high target of $130, suggesting up to 50.75% potential upside based on current levels. ANET stock price performance and valuation. At the time this video was created, Arista Networks stock was trading at $86.25 per share, reflecting a 1.4% increase over the past year, which underperformed the S&P 500's 8.6% gain during the same period. However, the stock's long-term trajectory remains highly impressive, with a 555.1% increase over the past 5 years, significantly outperforming the S&P 500's 98% growth. In terms of valuation, Arista trades at a price-to-sales PS ratio of 15.27 TTM and a forward PS of 13.51. The non-GAAP price-to-earnings PE ratio is 37.21 TTM with a forward PE of 35.28. Additionally, Its price-to-free cash flow (PFCF) ratio stands at 28.62. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS and forward PE are above the average, while the PFCF is below the average. Even though the valuation is still high, it is better than it was a year ago, when it was extremely high. Arista Networks growth potential. Arista Networks' growth prospect remains strong, driven by several factors. 1. AI infrastructure as a primary growth driver. Artificial intelligence infrastructure represents the most significant growth opportunity for Arista Networks. The company has established ambitious targets for AI-related revenue, projecting $750 million from back-end AI networking and an additional $750 million from front-end AI networking, totaling $1.5 billion in AI revenue for 2025. This represents a substantial portion of the company's overall revenue guidance of $8.2 billion for 2025. Arista is actively involved in major AI cluster networking buildouts, with 3 progressing from pilot to production stages. The company's leadership in AI spine networks positions it well to capitalize on the growing demand for high-performance networking solutions required for AI workloads. The shift from traditional InfiniBand to Ethernet-based networking in AI infrastructure particularly benefits Arista, as major customers like Microsoft and Meta increasingly adopt Ethernet solutions for their AI deployments. 2. Market expansion and revenue diversification. The company's 2025 revenue guidance of $8.2 billion represents a 17% growth rate, upgraded from the previous guidance range of 15 to 17%. This upward revision reflects strong demand across AI, cloud, and enterprise sectors. Arista's total addressable market continues to expand, with the global data center networking market expected to grow from $42.37 billion in 2025 to $107.79 billion by 2034 at a CAGR of 10.95%. The enterprise and software segments have shown improving revenue mix, contributing to overall growth and helping diversify the customer base. Campus networking represents another growth avenue, with Arista targeting $750 million in campus revenue for 2025. The company's expansion beyond its traditional hyperscale cloud provider focus into enterprise markets provides additional growth opportunities and reduces customer concentration risk. 3. Growth outlook and strategic positioning. Looking ahead, Arista Networks is well positioned for sustained growth with several key catalysts. The company expects Q2 2025 revenue of approximately $2.1 billion, ahead of analyst expectations of $2.03 billion. Long-term forecasts project earnings and revenue growth of 12.6% and 14.1% per annum respectively, with EPS expected to grow by 11.9% annually. The company's strategic focus on 800 gigabits per second Ethernet upgrade cycles, AI networking infrastructure, and cloud networking solutions positions it to benefit from multiple growth drivers simultaneously. Arista's involvement in building some of the world's largest AI centers at production scale further solidifies its position as a key enabler of AI infrastructure. Risks to consider. Despite the strong fundamentals, we should be mindful of potential risk. 1. Competitive pressures and market share risks. Arista Networks competes fiercely in cloud networking against major players like Cisco and Juniper. It faces tougher competition in back-end leaf networks, but holds a stronger position in AI spine networks. While Arista surpassed Cisco in data center switch market share in Q4 2023, sustaining this lead demands ongoing innovation and heavy R&D investment. Defending and growing market share in AI networking is crucial for its long-term success. 2. Customer concentration risk. A large share of Arista Networks' revenue depends on a few major customers, notably cloud giants like Microsoft and Meta platforms. This customer concentration means that any reduction in their spending or loss of these clients could significantly impact Arista's financial performance, creating volatility and risk in its revenue streams. Maintaining strong relationships with these key customers is thus critical to the company's ongoing success and growth. 3. Technology and innovation risks. Arista faces risks of technological obsolescence in the fast-evolving cloud networking industry, requiring constant innovation and R&D investment to maintain its competitive edge. Emerging technologies like 5G and edge computing offer opportunities but also challenges, as Arista must adapt its products to changing customer needs. Failure to keep pace with these advancements could lead to losing market share to more innovative competitors. Conclusion: Arista Networks stands out as a high-quality growth company with strong financial fundamentals, consistent performance, and solid long-term potential. Its Q1 2025 results highlight impressive year-over-year growth in revenue, earnings, and free cash flow, supported by exceptional profit margins and a debt-free balance sheet. Despite premium valuation multiples, Arista's leadership in cloud and AI-driven networking, combined with favorable analyst forecasts and robust market demand, supports a positive investment outlook. For investors seeking a reliable and future-ready technology stock, Arista Networks remains a compelling buy. But remember, this is not a financial advice. What do you think about Arista Networks? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.